Hello everyone. Uh, Today we're gonna continue with the next article of the book. So our article today is arbitrage strategy. All right, so let's begin. First one, we're gonna read about the definition. Arbitrage is a strategy that takes advantage of a temporary price differences of the same asset class into different markets. It trades and takes profits without incurring much risk. Investors implement arbitrage strategy by buying assets in a lower priced market and simultaneously selling them in a higher priced market. Arbitrage strategy are closely related to efficient market theory. This theory states that the market is perfectly efficient where all past and present information regarding the assets is quickly and reasonably reflected in the market price. In other words, efficient market will allow no opportunity to take advantage of arbitrage trading. However, for many reasons, subjective or objective, there are always periods of inefficiencies in the real market. That's why the arbitrage strategy is widely used and probably one of the oldest trading strategies in existence. So now we're gonna read two main characteristics of arbitrage strategies. The first one, only trade when there's an imbalance in asset price. This is the most important conditions of arbitrage trading, which can take several forms. The same assets but being traded at different prices in two different markets, or two assets have similar future cash flow expectations but are trading at different prices. The second one, only trade simultaneously. The buy and sell transactions must take place at the same time. The investor may be exposed to significant risk if there's too much difference in the timing. So now let's move to the next one, arbitrage trading in practice. Arbitrage strategies almost don't exist in the Vietnamese stock market. Arbitrage opportunities are more evident in the foreign exchange and cryptocurrency markets and in stocks traded over two markets, like the US and the European markets. In modern finance, arbitrage opportunities often do not exist for individual traders, but only for international banks. They can continuously use and convert different foreign currencies. An example in the modern economy of arbitrage is Bitcoin in South Korea versus the rest of the world. In 2017, the Bitcoin price in South Korea was 50% higher compared to the rest of the world. Individuals, organizations who can buy and sell continuously legally may make extremely large profits without risk. However, one activity of the world. In Vietnam, the cooperation between the State Security Commission of Vietnam (SSC) and the NISE to develop a mechanism for investors to participate in the two stock market was signed in May 2022. This can open up arbitrage opportunities in both markets. It is a potential project for small investors, although major banks around the world dominate the field. Let's talk about barriers to entry in arbitrage strategy. The development of trading system along with algorithmic trading leads to the extremely short occurrence of arbitrage trading opportunities. Sometimes they can last for just a few seconds. In this context, opportunity on trade on time. However, in terms of overall market, the more the transaction speed improves, the more efficient the market will be. Despite arbitrage trading opportunities, the price gap is also a key factor. An investor only makes a profit if the price difference can cover the trading fees and costs. So that is the end of the arbitrage strategy. I see you tomorrow for the next strategy, which is greed strategy. See you and good night.